In this video, I'll talk about the different filing statuses and the tax computation, the different tax brackets, etc. So the first thing we need to do is talk about the 5 different distinct filing statuses that the tax law provides. Those are single, married filing jointly, married filing separately, head of household, and qualifying widow or widower. So I'm going to write those here for us. That's going to be 5 filing statuses. We'll talk in more detail about it, but it's going to be single, married filing jointly, MFJ, married filing separate, MFS, head of household, HOH, and qualifying widow or widower. We're going to abbreviate that as QW. Tax table must be used for taxpayers that have less than $100,000 in taxable income. Otherwise, we will use the brackets. We'll talk about that shortly. Single, as far as single is concerned, a single taxpayer is one that does not meet the definition of a married individual or head of household, and as such must file as single. So single, not married as of 12/31 of that tax year, and that's pretty much it. State law dictates who is married, who's not married, etc. Married filing jointly. This is going to be a married for tax purposes so long as the couple was married on December 31st of the tax year. So married filing jointly, married on or by 12/31. So even if this couple went screaming into the altar at 11:59 at the end of that year, they're still deemed to be married for taxes and can file as married filing jointly. Married taxpayers may file a joint return even if they did not live together for the entire year. In the event that somebody wants to file separately, there are times where it is advantageous. There are other times where a couple may file married filing separately, so one person can exclude themselves from any possible tax issues. Married filing separate has a lot of punishments built into it. Certain credits, certain items are not available to a married filing separate couple, but this is a requirement. You either must file married filing jointly or married filing separate if you are married. So we'll just write here certain benefits. Rarely does this work out well for people. In the event you have the case of an abandoned spouse, an abandoned spouse is one that files a separate return from their other spouse. This particular taxpayer paid more than half of the cost to maintain their home during the year. They did not live with their spouse within the last 6 months of the year, and over 6 months during that year, the home was the principal resident for a dependent child. All right, so if that's the case, then they fall into head of household. So we're going to jump into head of household now. Head of household is a preferential filing for an unmarried taxpayer that maintains a dwelling or home for a dependent child. All right, so in order for them to claim head of household, they have to be unmarried or abandoned as of 12/31 that tax year. So unmarried or abandoned by 12/31. All right, and then they must have paid more than half. All right, so this is going to be 51% and above, more than half, 51% and above of maintaining a principal dwelling for a dependent child or other qualifying dependent relative. A unrelated dependent, such as a cousin, may not qualify for head of household status. Certain dependency rules we're going to jump into that in the next section. And if both parents are trying to claim head of household, there may be an agreement, a legal agreement, as to which spouse will use the head of household status. And last one we're going to talk about is qualifying widow with dependent child. So call this QW. This is going to be the benefit of being able to file a married filing joint return for 2 years after the death of the spouse. In order to qualify for this, the widow or widower must pay over half of the cost of maintaining a dwelling where a dependent child, stepchild, adopted child, or foster child lives. After that 2-year period, the taxpayer often qualifies for head of household filing status. All right, so we'll just say 2 years here. These are the high points. And then next I want to talk about the actual tax computation. So when we get into the actual tax computation, you start getting into the different tax brackets. All right, so I'm going to just do a small lesson on the tax brackets. But for 2021, there are 7 income tax brackets. So call these brackets. All right. So we have a 10%. We have a 12%. There's a 22%. There's a 24%. There's a 32%, 35%, and then lastly, a 37% tax bracket. So the tax bracket is a unique thing, and if we haven't really worked through these before, I can spend some time on this here. So I will make a lesson devoted strictly to how the tax bracket works, so that way we can focus in on more detail on that. So that will be the next lesson, the tax bracket.